Another episode of Estate Planning YouTube channel. We have a great topic today, segregated fund, why you need to have segregated fund for your estate planning purpose. So we have a special guest today. He's from Assumption Life, and he's with Assumption Life with 5 years, and he's in the financial industry for 20 years, and he also came from banks industry, and I know him for a long way back. Now we're going to talk about Seg Fund today, and I'm very privileged to have you, Daniel.
Thanks, Lucky.
So our topic is today is segregated fund, and also the purpose of having segregated fund for estate planning purpose.
Okay.
So tell me about what is segregated fund.
Okay. Well, a segregated fund is essentially like a mutual fund. So a mutual fund would be a basket full of stocks or
Mhm.
bonds that are sometimes related by, geography or by financials, for instance. But a mutual fund then would spread the risk around those individual stocks and bonds, and you have a mutual fund. Well, a segregated fund is essentially a mutual fund, but in addition to that, it has an insurance contract that is wrapped around that mutual fund, which would give the client some extra guarantees.
So you're saying you're putting a safety net on the investment on the like similar to like a protection on the investments
Sure.
that's help the client at least they have some guaranteed attached to this.
Correct. Yeah, there is certain things that are guaranteed, such as there's a death benefit guarantee, there's a maturity benefit guarantee. The client would also be able to bypass probate, name a beneficiary, maybe have some creditor protection as well. All these features that you would not have in a mutual fund.
Okay. So tell me the purpose of today's episode is estate planning
Hmm.
and why people need to invest on segregated fund on estate planning purpose
Okay.
and mainly we talk about non-registered investments.
Right.
So tell me what's the advantage of having uh, non-registered fund in seg fund, what's the benefit they will get out of it?
Well, the biggest benefit that they're going to get by having their money in a seg fund in a non-registered account is that they would be able to name that beneficiary.
Okay.
As soon as the person does die, what would happen is they would go through the death process claim, and then the beneficiaries would receive the money in the account that would be paid out very quickly, within typically a couple weeks.
Couple of weeks. Okay.
If that was in a mutual fund and there was a non-registered account and the person died, then it would have to go through probate. The accounts would be frozen. It would go through probate, and then that would take some time.
So it means the probate, I know roughly it's going to take at least 6 months to 36 months.
Yes.
Okay. So you, in a nutshell, you're saying the example, if the client have three example of 300,000 in the bank
Hmm.
on a mutual fund, suddenly he passed away,
Yes.
and the client have a will, and the executor go and say, you know what, uh, my father passed away, I have a will, I need to get that money out. Uh, how this works?
So once you go to the bank and present the death certificate, what they're going to do with all of the individuals' accounts is freeze them. The bank account, their mutual funds, whatever it is, accounts will be frozen. So they're basically on the person's date of death, frozen in time until they go through the probate process. The funds are released and then they're paid out to the beneficiaries. As you mentioned, that might take 6 to 36 months for that process to happen.
Okay. So, in a nutshell, if in case if the 300,000, same time if it passed away and there's 300,000 in the mutual fund, and even the market goes down, and still you think the executor of the will have have any access to change the fund or anything?
No, unfortunately, because the account is frozen, you would not be able to change the current investment. So if you are in a current market downturn, which we are right now,
Hmm.
you would not be able to sell and put it into cash, for instance. You would have to remain in that fund. That's one of the the downfalls of having money at a mutual fund in a bank.
So, a lot of seniors now. doesn't know about seg fund because banks don't sell seg fund, but they sell only GIC or a mutual fund. So tell me, who sells seg fund, and you talk about some of the good future on seg fund. So tell me, many company have selling insurance, especially the insurance company. I think they are selling them. So can you elaborate
Sure.
your
So
explanation?
segregated funds are sold by insurance brokers or independent insurance brokers, such as yourself. The nice thing about it is that they can offer choices from different carriers. It's just on Assumption Life, but it's all the other carriers that are out there that as
Yeah.
well, where the banks might be a little bit more focused on their own individual products as well.
Hmm.
Um, but certainly, seg funds offer a bunch of different guarantees, as we mentioned. So the death benefit guarantee. So, for instance, if you have a 100% death benefit, you put $100,000 into an investment, and the market falls, it drops down to say $70,000 is your investment, and unfortunately you pass. If you have 100% guaranteed, then they would guarantee your $100,000 that you initially put in there.
So you talk about this guarantee. There's two type of guaranteed you talk about. One is maturity guaranteed, and the other one is you talk about death benefit guaranteed. Can you give me some explanation of how the guaranteed works?
So for sure. So if the maturity value, let's say I'm going to guarantee that it's 100% of the maturity value. If I have put in $50,000 and that money um, essentially drops, and I have waited to the maturity guarantee period is come to an end, it typically is 10 to 15 years.
Okay.
If my money is worth less than what that guarantee is at that time, the insurance company will top it up and make sure that the amount that the client has is equal to the guarantee that they
So the
received
client
at the
won't
start.
lose actual deposit.
No, they would have the same
But with
fifty
the mutual
thousand
fund, what
dollars.
will happen?
Well, there's no guarantee, so whatever is based on the market.
So even if the 100,000 become 80,000, they will only get 80,000.
Yes,
Okay. So that's a lot of Canadian doesn't even aware of what they are going through.
for sure.
So tell me about the resets. I know seg fund have some
Yep.
reset options, and I know mutual fund doesn't have it, or stocks doesn't have it. But what's the reset all about?
So a reset means that you're going to start your guaranteed period over again.
Hmm.
So you're resetting the maturity value. So if you
Okay.
had $100,000 and it went up to 125, and let's say you wanted to reset that, then that means your clock would start again from when you reset, and you'd have to wait the 10 or 15 years for that maturity guarantee to happen. But now instead of having 100,000 guaranteed, you would have the 125,000 guaranteed.
Even for the death benefit, some people
Um,
have, some company have death benefit also guaranteed on the reset option.
Yeah, if they have that option, then yes, you could have that death benefit reset as well at now 125, and you die, then you would be receive the 125,000.
So you was mentioning about creditor protection. I know as a business owner, I just want to know, and I know a lot of Canadian also own business. Uh, what's the difference between having seg fund, uh, non-registered investment, rather than having in mutual fund? So what's the
Right.
benefit of having seg fund as a business owner?
So a business owner or even a doctor or lawyer, people that might run the risk of getting sued, if this is in a mutual fund, those monies are part of their net worth or their estate. So those are susceptible to creditors. So if somebody gets sued, if you have money in a mutual fund, they could get access to that money. If
Okay.
it is in a seg fund, that money is creditor protected, so they wouldn't have access to that investment that you have in that non-registered seg fund. That would not be part of a lawsuit if you were to get sued.
So tell me, for a lot of seniors nowadays, they have their principal resident like a bigger house they had now, and then what they do now, they cannot maintain, they cannot shovel snow because they get old. Now what they are trying, the trend is coming up now. They're selling the house and they're moving to condos, and maybe they sold the house, the principal resident, probably around 1.5 million, and then they bought a condo for 600,000. The remaining money they putting in GIC or mutual fund. Um, you think it's a right move, or you think there's another alternative move they could do, and avoiding probate and all?
Sure. Well, for obviously the client has some choices, and one of those choices would be a seg fund.
Okay.
You're correct. There is a trend or a change in our demographics where there's going to be more and more.
Because of baby boomers, right?
Exactly.
Yes.
There's more and more money that's going to be in non-registered accounts and be transitioned or transferred to other people, their beneficiaries. And the most important thing to consider then is, when do my beneficiaries need this money? And if it's important that they need this money quickly, then as we mentioned, 6 to 36 months is the typical probate process for
and
a
the fees
mutual
are
fund.
very heavy.
And the fees are high.
Yeah, because the first 50,000 they have to pay $250. So each $1,000 they have to pay $5 each, and then 50 and above, each $1,000 they have to pay $15 per $1,000. People don't understand. This is not a tax. This is actually you're paying to the provincial government.
So it does add up, right?
Yes.
And I mean, if we have $1 million house, and
that's going to be $14,500.
So there's some money that we could then, if we just simply had that exact same mutual fund but in a seg fund, that money would go out to the
So
beneficiaries.
you're avoiding that 14,500 if you have it in seg fund.
Right. We would, the beneficiaries would have an extra 14,500, and that money would be in their bank account much, much, much quicker.
Okay. So for our Canadians, so what you think as an estate planning purpose, the seg funds more beneficial to them or not?
Well,
there's so many ways that
right.
we could emphasize this, but you tell me what's.
Certainly, I think seg funds should be an integral part of people's estate planning.
Yes.
And again, if I've got a lot of money that I sold because of my house, that I have because I sold my house, and I have the non-registered investments, certainly, personally, I want to protect those. I want to make sure that they're not susceptible to creditors. I want to make sure that when I do pass, those go to my beneficiaries quickly and in the most tax-efficient manner.
Because the next 8 years, I heard, is $1.05 trillion going to be exchanged one generation to the next generation. It means per day it's 500 million actually. 500 million going to be transferred to one generation to other generation. So in a careful planning on your estate planning, you could take seg fund as a part of your investment to avoid probate, and you have some guaranteed attached to it, and your money will be more access to take it away faster than goes to probate. So that's why you are trying to tell us now today.
Right. Yeah. I think you summed it up perfectly there. It's really important to look at seg funds because of the different characteristics that they have and the benefits that they have, such as the bypassing probate, how quick it is, and those guarantees. I think they're invaluable, and it should be part of everybody's estate plan.
I hope we cover most of the stuff today, and I really have to thank you for your time and the knowledge you gave us for our audience.